Sasol was founded in 1950 to make oil from coal for the South African market. Today, Sasol uses coal, oil and gas reserves to manufacture and sell liquid fuels, fuel components and chemicals throughout the world. It has a market cap of 240 billion rand, a PE of 8.6 and a dividend yield of 4% and the support of most of the fund managers in South Africa, including these two.
Yeah, very much so. I think this is one of the things where people say there's a bit of an enigma. Why is it still relatively cheap? It's one of the cheaper ones of the stocks if you just evaluate it from a simple earnings point of view. Also quite a lot of potential, especially as with the gas fracking taking off in countries like the US. They've got a new project that's it's actually huge. And of course, with these huge engineering projects, it does provide a longer-term growth platform.
Is it blue sky, or is there tangible growth from this project?
There's tangible growth, but of course, with all of these single plants with there are technical risks. In other words, you start up. Bahrain was, I think, similar, had teething glitches, and of course, when it's such a big project, it can weigh on the actual company as to when the actual value of these projects actually unlock and provide solutions. And there's a very long investment lead time and quite a lot of, interim burden on the actual cash flow to actually get it going. But nevertheless, it is something that is paying a reasonable dividend, quite a good dividend in fact. It's again a wide footprint, and I think it's in the area of trying to unlock value from carbon, which the traditional players can't, and I think they do very well.
David Constable having taken over from Pat Davies, good move. You like the new management team?
And I like anything that has to do with the globalization of the business, because Sasol's got this magnificent cash cow here. But with businesses in South Africa, the big plant in Qatar, it still feels like a kind of funny emerging market type story. And the US market is where it needs to go, because that's where all the natural gas is, and that's where this big gap has opened up between refined fuel products from oil, which is still expensive. So it's going to cost an absolute bomb to build that plant in Louisiana. There are going to be cash flow challenges. It raises questions about the dividend yield. But I think the further along they get, the more attractive this company becomes as an acquisition target.
Rand, oil, two big external factors, the two biggest impacts on the stock.
I see the oil price remaining fairly firm. I think the Rand, in fact, could be somewhat supportive. In fact, I think if you really are anxious that things are going to fall in a heap global markets-wise, then Sasol would definitely be the best safe haven because of its cheapness relative to expectations.
Chris?
Not only that, the Rand is actually quite vulnerable at the moment because of the widening current account deficit and slowing. That's just a horrible combination. And it does suggest that if there is any blowout on the Rand, and one has to put that as a realistic risk, to say, what have you got in the place? Now, all of these companies have that element to it, but I think Sasol's got the strongest element of that.
Hot or not on Sasol, Paul?
No, I like it a lot. Hot on it, we own it, and it's in the portfolio.
Hot or not?
Hot.